Welcome to the Monthly Income Podcast. I'm Tom Lydon, and each month we're joined by the founders of NEOS, Garrett Paolella and Troy Cates, who help us focus on the importance of monthly income. Gentlemen, welcome. Great seeing you again.
Hey, Tom. Great to see you as well.
Hey, Tom.
I hope you both enjoying your summer and getting time with the family, but I know you're both working pretty hard as well.
That's true. It's the nice weather's finally rolled in, but that doesn't change. Markets moving at a quick pace and stuff to focus on for clients and spending time on our funds.
And Troy, I mean, before we get started, I got a lot of questions, but are you surprised with the rate of adoption that you've seen from advisors and self-directed investors? I mean, the fact that you just topped $9 billion in assets.
No, it's very exciting for the team. I don't know if it's a surprise. We've always known this concept of option-based income and these products that we were putting out would grow over time. Maybe it's as quick as they've grown. It's been more of the surprise. We're just coming up on our 3-year track record for our 3 oldest ETFs, SPYI, BNDI, and CSHI. So very excited about that. So yes, it's been, that part's been a surprise how quickly it's come along, but the space is growing. We talk to advisors every day and everybody seems eager and wanting to learn about the space and continue to see it grow.
Well, Garrett, with also your introducing new ETFs as the months go by. And the crazy thing is you're getting adoption from those individual ETFs too. Are you surprised as you develop ETFs that represent different asset classes that your clients are continuing to spread the love, let's say?
I think it's really what our core focus is, being a solutions provider and allowing investors to choose where their needs are. And I think, one of our more recent launches, IAUI, it's always a mouthful, is our NEOS Gold high income ETF. It's just one of those asset classes that have historically not had any income component to it. And after pretty much a historic run in gold that we've seen over the last few years, it's now an area of a portfolio that could help investors. So I think that's just one example of what we really love to do is think about the end investor, their investments, the risk tolerance, and what could we produce that is actually going to be helpful, right? Meet their retirement goals, meet their estate planning goals. And I think that is really what gets us excited. Seeing the adoption is great. We're humble. I think if you didn't mention 9 billion, we probably wouldn't have ever mentioned it. It's really more about the performance and the choice for investors to really espouse their individual views or hitting their retirement goals. And when we can help them achieve those, I mean, that's the great feeling. That's what excites us on a daily basis and where we keep thinking of, new products to bring out.
Yeah. And the enthusiasm grows. Troy, here we are in the back half of the year. What did you guys learn from the first half of the year? What were some of the things that maybe surprised you?
I know we talked about this early on in the year, but we thought volatility would come back into the marketplace this year with a new administration, different things going on in the market. We knew volatility would be there. I think maybe what surprised us was how quickly volatility came on, a lot of headline risk around that, whether it was tariffs or other things. But through that point and watching our products perform, they all performed as expected. So that was nice to see that our rules-based strategies were doing what they should be doing, no matter where volatility was going. And it really created this opportunity to showcase what our products would do when the equity market sold off and volatility spiked to levels we haven't seen since COVID. So for us, it was, not so much a testing or proving ground, but it was really nice to see the products work through those different market environments in such a short amount of time.
Yeah, investors, advisors, when they hear volatility, they don't look at that as an opportunity. Garrett, you guys use that in the positive as far as your overall offerings. Talk about that a little bit more.
Yeah. So for us, Tom, when we're thinking about our products, I think as our current investors know and people who are new to seeing our podcast, we're using volatility as a way to generate income. And so when you see the equity markets go up and down, right, that's just volatility. And there's ways to convert that volatility into consistent income for your portfolio. We like to do that across whatever asset class and investment you're looking for in your portfolio, whether that be something like a CSHI that we offer. It's a 1 to 3 month treasury bill product, or all the way up into Bitcoin at BTCI. There's different volatility levels in different asset classes. And as we see asset class volatility rise, there's ways to generate more income or additional income for the portfolio. And so for us, it's really taking that what has historically been a concern or a risk that you're trying to mitigate in your portfolio, not to mitigate it, to actually leverage it, to harness it as a return, as an income in a really tax efficient manner for your portfolios. It's something that everyone should be really leveraging at some part of their portfolio, is turning that risk or that concern in the marketplace into actually a benefit for yourself, in your portfolios.
As you look between now and the end of the year, what's unresolved? What are some things that people think may happen, or do we need to keep an eye out for?
I think going into the back half of the year, everybody's going to be watching the Fed. Everybody thought the Fed would cut earlier. They haven't. We have a meeting coming up at the end of July, then September, December. July looks like nothing might happen right now. Maybe September something happens, but I think everybody's going to be all eyes on the Fed outside of any headline risk, any more tariff talk, things like that. But I think, looking at where the market is sitting here at all-time highs, basically, I think the market's poised. They're pushing to try to even move higher. So depending on what the Fed decides to do going into the back half.
Garrett, anything you'd add?
Yeah, it's tariffs and it's Fed. I mean, right, it's easily Powell and Trump going head to head. You can see it publicly. Every day we're talking tit for tat, name calling, all sorts of things. I mean, ultimately, when you think about it, is, how do you steer? Listen, Trump is trying to produce revenue for the country, right? And as we have historic interest rates, the debt for the US is just that much more expensive. And so he's trying to find a way to generate revenues through tariffs. Now, the Fed is saying, well, we're not reducing now because you've created tariffs and we're unsure if that's going to create more inflation. And so you're getting this big push-pull ultimately of where's the economy going to land? Are we heading into a nice soft landing and the Fed can cut rates and reduce interest rate costs for the government and for all other borrowers, or are we going to start to see inflation tick up a little bit? So it's really just, honestly, two men going back and forth right now, having an argument over generating revenue for the US and also cutting costs for the government and also for others. So I think at the end of the day, it's really going to come down to when do we start to see those rate cuts? If we see them, that's a positive. That means we've gotten through whatever this transitory inflationary environment could be, from tariffs, and also being able to let people position their portfolios in a way for, a rate cut environment. That's obviously going to be a big change for investors today that are looking for income, and obviously something we talk a lot about on the show being around monthly income.
So geopolitical risk, tariffs, even the strife that we see between the Fed and Trump, that all affects volatility. Does that scare you?
Not me. I mean, we kind of thrive for that. I think, listen, volatility is an opportunity. And we look at that as converting volatility, obviously, into a very positive benefit, as I just mentioned, in your portfolio. But also investors just in general should look at volatility as a buying opportunity, right? If you're not a short-term investor looking in the months and you're looking in the quarters, years, etc., then volatility tends to add the ability for you to find good buying opportunities for any types of products in your portfolio.
Troy, I think what we're talking about is, especially as you think about older investors that tend to be a little bit more conservative, are they coming into the fold with the idea that they not have that high monthly income that's, oh, by the way, pretty tax efficient, and they're also getting educated about what the advantages of volatility can bring to their portfolios over time?
Yes, I think traditionally when you thought about that investor class, people later in their, call it investing careers for their life cycle, were really conservative in thinking I have to be in a fixed income portfolio, for example, or a muni bond portfolio of some sort where I'm getting more tax efficient income. And as they're looking at these products grow and develop, and they're saying, oh, I could still be involved in the equity markets, or maybe an alternative like REITs or Bitcoin, and earn income off of it and still participate with that market. Because yes, maybe the person's 75, but they're not looking at that being the end. They say, I have another 20 plus years. I want to be involved in equities. I want to have that upside. I don't want to be stuck in a smaller fixed income portfolio and have that be my actual fixed income for the rest of my life. I want to make sure I'm growing as the market grows. And that volatility, if I could earn some income off of that volatility, that's even better in a tax efficient manner.
So Garrett, is there a change afoot here in the way not only advisors, but maybe self-directed investors are looking at their asset allocation?
I think so. Just from what we've seen, I mean, the space that we live in, these types of products that we're bringing to market here at NEOS, Right. Yes, we've had great adoption within that from investors. But ultimately, if you look at the entire market, I mean, we've seen almost $200 billion flow into these types of products just in the last 3 years, right? I think a lot of advisors, a lot of investors are finding ways to enhance their overall asset allocation with these liquid, transparent ETFs, lower cost fees, right? To where it's not the ultra high net worth allocating into private type investments. They're able to get liquid, transparent products, and so we've seen a huge adoption overall into the whole space and sector because they've been meaningful ways to enhance the investor's outcome and take advantage of areas they have not been before. And so I don't know if Troy was talking to you on that, Tom, but I don't think you have to be too much concerned. You don't have to sit in your core, fixed income anymore. You can think about, taking a little bit of a different approach and not worrying about, retirement and, enjoying the
Garrett, have you seen my wife's shoe closet?
I have not. I've not been in your house nor in
I'm not
your wife's closet.
taking the foot off the gas here. I'm not resting. I'm depending on you guys here.
Sounds good.
Fair enough. And I was not pointing at Tom when I mentioned the 75-year-old, just for the record.
Yeah, I saw the wink, wink. Thanks, Troy. Thanks. I know you got my back. Appreciate it. Guys, what's with the non-traditional asset classes today? I mean, they're areas that you represent, but how are you getting advisors to think about those when maybe they haven't thought about them?
I think, when you think about those alternative or non-traditional, whether it's gold or a Bitcoin or a REIT space, I think what we've heard is some of these areas, think about Bitcoin, for example, it's gone from 30 to 50 to 100 now, almost 120,000 in such a short amount of time. People are looking at it and say, do I look at Bitcoin and pick a spot and get long and then hopefully sell it down the road and make some money? Whereas they could look at a product like ours in BTCI and say, okay, I could get involved in Bitcoin. I could potentially capture a lot of the upside, but during that time when I'm holding it, I'm going to earn some income off of the volatility of the Bitcoin product itself. So they're looking at it as, I could dip my toe into Bitcoin. We have a gold product out. I could dip my toe into gold, which traditionally has never really paid any kind of income. And now I could get some income off of it while I'm still participating in that part of the market.
So Garrett, when you think about things like gold and you think about crypto, Troy was being very humble. The dividend stream in those products are pretty attractive. So for advisors who not only can diversify, maybe get less volatility in their overall portfolio, but at the same time, increase that dividend stream pretty handsomely. Is that part of your conversation today with advisors and investors?
It is. I mean, we just had a conversation today with an advisor that's local to our office. We've known for a long time, have been friends, outside of, the work environment. And one of our conversations gravitated towards talking about our new gold ETF, and that some clients have had these long-term static allocations into gold. And there's been a great run in that ultimately in the last few years, but they're also later stage. They're retirees. They're looking for income. And so we end up gravitating towards a whole conversation, not around just like, where's the price return of gold going to go, but the ability now to generate, right, a significant amount of income off of a gold position that has had zero income ability in the past. And so when you look at that for a potential allocation, even if that's a 1, 2, 3, 4, 5% allocation in a client's portfolio, the fact that they'd be able to generate in the areas of 10 or 12% on a gold allocation, right, is meaningful for monthly cash flow. So I think we're talking to advisors, we're talking to investors, really just around how you can not only diversify risk, the ability to invest in these types of products can give you better total return, because if you were overweight fixed income, with not much of a return there and a lower yield, you're now able to have a lot more options, pun intended, for your portfolio, that's going to generate you income in different ways to help diversify your overall allocation and also leverage non-income bearing investments in the past to where, today that can help you really meet your monthly needs.
Troy, I love when you and Garrett have these stories about meeting with advisors, whether they're across the street or across the country. Do you have any other stories that you might be able to share? Because we learn so much from advisors' portfolio construction, their opinions, not just on the market, but the economy, global strife, things like that. And they're making changes. So anything else you might be able to share from recent discussions?
Yeah, I think some of the better conversations we've had with advisors lately have been really just the feedback saying, hey, we love these products that you're putting out. would you ever think about putting out a product like this? And we talk to them about what their needs are and what their clients are looking for in the income space. And a lot of them will talk to us about their younger clients that might have a little bit of money that they're starting to invest, but they want to be involved in these income products. They want the income, whether it's to supplement their lifestyle, pay for some bills, or they just want to reinvest the dividend for down the road when they turn that off and they take the dividend. So it's really interesting to hear what the advisors are hearing on their side and what products. We really look at ourselves as a solutions provider. So we're really trying to offer these different diversified products within equities, fixed income, alternatives, and really have broad base to really harness that volatility from different sectors of the market to eventually give you some tax efficient income.
Okay, guys, so for an old guy, I still do okay on internet search, watching podcasts, and most importantly, I watch you guys on a whole variety of different podcasts. And what's great is you're developing a following. You guys are kind of getting to be rock stars. It's really fun to watch. But most importantly, I love the comments from investors who really not only enjoy the product proliferation that you folks are bringing to the marketplace, but also they learn from you as well. I mean, how does that feel? It must be a lot of fun. Garrett?
I'd say shocking, because this is a dry subject that we've been passionate about for decades. And the fact that anyone is really excited to listen is a great thing. Listen, we are very passionate about the space. We've been investing our own money and clients' money in this, as Troy and I have talked about in the past. And I think, Tom, like almost 2 decades of working together, and so for that, it's really focusing on the fact that we love to talk, and we will happily give any anecdotes, anything we're hearing, what we're thinking, what we're seeing in the marketplace. And we appreciate our clients for, one, their trust investing with us, but also just the interest, in listening to us on different, channels or different delivery places like these podcasts is exciting, but it's just something we're so passionate about.
And Troy, before we go, what I love seeing is they're all working off each other, and they got together and they called the day that the dividend is paid out on a monthly basis from you guys, they call that payday. And it's kind of stuck a little bit. And I like it myself. I tell my wife when payday is, and inevitably Zappos shows up the next day with a couple more bucks.
I was going to say, I don't know where you're going with that one. I might not open that shoe closet.
It's exciting to see the growth in the space, really, and exciting to see the growth here in the ESI. The whole team is, very excited and passionate, as Garrett said, about our products, about what we're putting out in the marketplace, and really proud of it.
Well, guys, thanks again. Thanks for all your dedication, your team, all your hard work, and look forward to joining you next month on the Monthly Income Podcast. Enjoy the summer.
Thanks, Tom. You too.
Thanks, Tom.